This is the World Financial Report podcast with Harold Siegel. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping today's program Thursday, November the 9th, 2017 at 8:08 a.m. Mountain Time. As we take a look at the markets this morning, the U.S. dollar is at 94.78. Canadian dollar 78.59, gold 12.83, silver 16.91. The gold to silver ratio is 75.75. Platinum 931, palladium 1006, Bitcoin, and we're going to start mentioning this because it is quite the phenomenon. In fact, this week there was a report that came out. Google says that people are searching Bitcoin more than gold now. Now, Bitcoin in Canadian dollars, $9,148.50, in U.S. dollars, $71.81.50, and oil WTI, $56.98. There's an interesting quote that we have in our free weekly newsletter, and you can get that newsletter from Harold. Connect with him at rarecoloreddiamonds.com or hsfineauctions.com. 1-800-432-1022 is Harold's number. Get our free weekly newsletter, the companion to our podcast. And there's a quote from John Embry from Sprout Asset Management, and he says, "I would suggest that Bitcoin enthusiasts be very careful here, as the authorities are now in the process of setting up a futures contract. That is how gold and silver prices have been controlled and continually suppressed the past decades." Harold, it's interesting to note as we start today's program, 1 year ago today, the world woke up to President-elect Donald J. Trump. He was elected 1 year ago. Now, since he took office, the U.S. stocks have gone on a record-breaking run, fueled in part by investors and the hope that he'll deliver on his business-friendly agenda. Trump has rarely shied away from pointing out the market's momentum, mostly boldly stating upon Air Force One here recently on the weekend, the reason our stock market is so successful is because of me. And of course, he is currently on an Asian trip. But Harold, always the humble Donald J. Trump, President of the United States, and stock markets, that is the truth. They have been on an amazing run since he took office.
Well, it certainly has, but I don't think anybody's attributing any of that to him, to be honest with you. Fact is that he hasn't accomplished much at this point, especially a lot of the campaign promises that he's made. So fact is that we know why the stock market is up. It's because of Amazon and Google and stocks like that. It has absolutely nothing to do with President Trump, but it doesn't shock me that he's going to take credit for that. Fact is that once he did become president, the markets were very optimistic and thought he would do a phenomenal job. And the U.S. dollar rallied very strong. And that was a good indication as to how not only people in the U.S. felt, but people worldwide felt about him as a potential president and how it's going to affect the economy in a positive way. But obviously that has not happened. And the best indication of that is the U.S. dollar, because the U.S. dollar rose above par to 103 as he first became elected within the first few months of his presidency. But once we started to get an indication as to what he's really all about and the job that he's done, the U.S. dollar has really fallen substantially. It dropped from 103 all the way down to 92 cents. It dropped 11 cents. That's a massive drop in the U.S. dollar, seeing that the U.S. dollar had just recently broke par and was probably on its way back to the levels that we saw back in the 1990s when it was the strongest currency. So again, I don't attribute any of this movement in the stock market or anything positive happening in the United States to Trump. Now, I must admit that I voted for him and I thought that he would do a great job. So far, I think he's been a disappointment and a blowhard and has not done almost anything that he said he was going to do except embarrass the country. So all in all, I do believe that another reason that the stock market, that the Dow is up so high, is that Europe is in such big trouble and other countries financially are not doing well, nor are their investment markets. So that money comes into the U.S. People seem to be very comfortable trading the stock market. And again, you have stocks with tremendous track records like Amazon and Google that are hitting records all the time. So I believe that it's foreign money coming into the United States that's moving up the market, more buyers than sellers. And you've got a market that's been on a tear and the general public is jumping in. Also, when you have a market as strong as the Dow is right now, it also becomes extremely dangerous. Now is not a good time to buy into the Dow because it's so high, it's at records. And again, if you look at the overall economy in the United States, the economy is not great. It's better than most other countries, but it's not great. So again, at this point here, I would be very, very cautious about ever entering the stock market, especially at these levels. I would wait for a major correction, and a lot of top analysts feel that that's on the way. In the meantime, I would look very strongly that the U.S. dollar is going to come back strong. I do believe that the dollar will break par again. It's the reserve currency. Again, the Dow is doing well, and the U.S. economy is doing better than other countries. I don't see why the U.S. dollar is not going to come back to at least the par level within the next 6 months.
Connect with Harold at 1-800-432-1022. Get our free weekly newsletter. Learn about investing in hard assets, gold, silver, diamonds. Harold has an auction underway at hsfineauctions.com. Check that out. Go there right now, hsfineauctions.com, and take a look around. You can sign up and be a part of that auction and start bidding immediately. Harold's website's rarecoloreddiamonds.com, 1-800-432-1022, hsfineauctions.com. An auction is underway right now. It was interesting to note that this week, almost a third of millennials would rather own Bitcoin than stock. And I'm very curious to see where Bitcoin goes, if this is just a mania or a fad and it ends in tears. That according to a survey by venture capital firm Blockchain Capital, which also found that 42% of those aged 18 to 34 were at least somewhat familiar with cryptocurrencies, compared with 15% among those 65 and up. Bitcoin surged to a record high on Wednesday on bets that a major test of the biggest digital currency has been called off. Now, as I mentioned off the top of the show, and we have this story in our free weekly newsletter, and I encourage you to get our free weekly newsletter from Harold. But an interesting story, buy Bitcoin has overtaken buy gold as an online search phrase. Add Bitcoin to the list of things denting gold's appeal. Bullion's rally faltered in the past 2 months as the dollar strengthened and global equities set new records, while concerns over Brexit and Catalonia's push for independence failed to drum up any notable haven demand. Now Bitcoin surge is attracting investor interest towards the cryptocurrency and away from the metal. That according to the biggest online vaulting service, according to Google's Trends. They say global searches for Bitcoin, buy Bitcoin, have overtaken buy gold after previously exceeding searches for how to purchase silver. Last month, the amount of gold changing hands on Bullion Vault's online trading platform dropped by almost a third from the 12-month average. But it's interesting to note, and we have this article in our free weekly newsletter. I encourage you to read it. Nels Christensen, he is with Sprott Asset Management, and he said gold has outperformed the S&P 500 since 2001. While investors searching far and wide for positive market gains, one portfolio manager is puzzled as to why gold continues to be ignored and shunned. Trey Reich, senior portfolio manager at Sprott Asset Manager, noted that gold has had an impressive run since 2001, and that's back when Harold recommended it. Back 2001, when it was around $200, $300, significantly outperforming the S&P 500. Gold has generated positive annual returns in 14 of the past 17 years. What is even more impressive is gold's performance compared to the S&P 500 index. He said in a report Tuesday, gold's compound annual growth rate for the 16.75 years 2001 to September 30 of 2017 stands at 9.68% versus 6% for the S&P 500 index, dividends reinvested. Now, with equity valuation stretched near record levels, Reich says the argument to include gold in a balanced portfolio is stronger than ever. He added that during the dot-com crash between 2000 and 2002 and the financial crisis of 2007 and 8, the S&P corrected more than 50%, and gold provided unrivaled protection for investors. We are aware of no reasoning to suggest that gold's portfolio protection benefits will prove any less potent during the next correction in equities, he said. Gold has done a masterful job of insulating portfolio capital from sharp declines in U.S. equities during the past 3 decades of financial crises. One of the reasons why gold has been a safe haven during turbulent times is the fact that it has a low correlation with other traditional asset classes. Now, they go on to say that the precious metal also holds its own against high-profile alternative indices. The question now remains, how does an investor incorporate gold into their portfolio? He says that through their research, they recommend an allocation of 2 to 9%. Broadly speaking, the higher the risk in the portfolio, whether in terms of volatility, illiquidity, or concentration, the larger will be the modeled gold allocation to offset the risk. And these comments come as gold continues to struggle to break out of a 2-week trading channel as prices hover below the key psychological level of $1,300. But Harold, interesting to note, buy Bitcoin overtaking buy gold and buy silver. And then I agree with John Embry. I think people that are in Bitcoin should be very, very wary of these future contracts. But Nels Christensen, I think he's right on. Over the long term, 14 of the past 17 years, people have made money in gold. And Harold, you recommended gold back in 2000, 2001. We were about $250 to $300 and rode it all the way up to 1920.
You better believe it. But this is not unusual. The fact is that when gold was in the news every single day and it was making those mammoth moves, and we were involved in the entire bull market. I mean, to be involved in an 11-year bull market is so unusual, and the amount of money that was made during that time was astronomical. So what actually happened is that during that time, gold was in the news every single day. But after 2011, when the market dropped from 1,900 down to 1,050, the market has traded in a range now for the last 4 years. 5 years, actually. So Bitcoin is in the news now because it's gone from basically a few $100s for a Bitcoin up to almost 7,000. Now, the millennials can talk about it all they want, but, to pay $7,000 for a Bitcoin at this particular point, I don't believe they have that kind of money. And as far as a futures contract for Bitcoin, it would make sense because it's going to pit buyers and sellers together, just like any futures contract. But the market itself is so volatile, it's not something I would touch with a 10-foot pole. I would not go near Bitcoin at this time because it's such a mystery and there's nothing backing the currency at all. So it's something I would definitely shy away from. As far as gold making money every single year, you would have to be able to buy it at the low of the market. So the market is basically traded in a range for the last 5 or 6 years. That's why gold is not, when you start to Google gold or buy gold or got silver type of thing, it's just not in the news now because it's just trading in a range. For gold to break out at this point, it has to break 1380. 1300 is only a psychological barrier. It's got to get above 1380 and close twice above there in order for gold to start to take off again. And there was a reason why gold dropped from 1900 down to 1050. It was made to happen. Otherwise, gold would have been trading at 2000 to 2500. We know that the exchanges that trade gold futures made that happen by raising the margin requirements so many times that it made it so expensive to trade gold that all the speculators sold out. That was an illegal act that the government instituted because we are going through a recovery after 2008, and by gold trading at $1,900, it signaled that there were still problems in the economy, which there definitely were. So this type of manipulation is not unusual when the markets get tough, and that's what was happening at that particular point. So after the market hit $1,920 in 2011, and it dropped to $1,050 because they raised the margin requirements so heavily, gold has not been significant since. So in order for gold to move again, the US dollar would have to drop substantially, because there's a direct correlation between gold and the US dollar. The stronger the dollar, the weaker gold is. Or we would have to have some type of geopolitical situation like an attack by North Korea, and then we would see gold take off. So it's those two factors. One, the US dollar falling substantially, and number two would be some type of war between North Korea and the US and that type of thing. That would all be good for gold, believe it or not. But at this point, I don't see either one of those two things happening over the short term. Even though there's rhetoric with North Korea and, and saber rattling and all that type of thing, it would take an awful lot for them to pull the trigger, or for us to pull the trigger. So I just don't see that happening at this particular point. And judging by what happened this week with President Trump on his Asian tour, China seems to be in line with trying to, thwart any type of effort by North Korea. So again, at this point, as long as gold keeps trading in a range, it's the stock market and markets like Bitcoin that are going to steal the limelight over a market that's been trading in a range for the last 5 or 6 years.
Connect with Harold. Learn more about investing in hard assets. If you have any questions about Bitcoin, Harold will be happy to answer them. 1-800-432-1022. To connect with Harold, his website, rarecoloreddiamonds.com, hsfineauctions.com. There is an excellent article in our free weekly newsletter. Get it from Harold. Jeff Clark wrote an article, So You're a Bitcoin Millionaire. Now where do you invest? If you've made a profit from Bitcoin and other cryptos, congratulations. Obviously, a smart investor who spotted a trend early and was able to profit. Hats off to you. But now is the time to take some profits, right? If you're smart enough to buy in early, you're smart enough to know that it's not a profit until you take it. And that asset price doesn't rise forever, no matter how revolutionary the technology. Yes, some cryptos will gain widespread acceptance and use, but most won't. Yes, the technology is here to stay, but that doesn't mean prices will rise indefinitely. Yes, it's a whole new industry that will continue to grow and evolve, but that doesn't mean you'll make a killing forever. Until you book a profit, it's only a gain on paper or digitally. It's important to sell some of your position to lock in a gain. And he goes through all the reason why, and he has some charts in there. They are just excellent charts. So get this article from Harold. Harold will be happy to send it to you, 1-800-432-1022. It's in our free weekly newsletter. And Harold, we should talk about your website, hsfineauctions.com. There is an online auction underway right now, and this is something that you really plan on putting a lot of attention and care to in the days, weeks, and months ahead.
You bet. I believe that the future of the diamond business is in the resale of diamonds, and that's what we're really putting all of our efforts to at this point. So at this point, we tested our new auction site during the summertime when things were slow, and it did very well. But really starting to get into the new year, there's just so many holidays and everything, and it takes so much work to do an auction with advertising it and filming it and the appraisals and the GIA reports and everything. So in order to do it correctly, it takes time to do. So for the new year, we're anticipating that's where our major focus will be, is towards our auction business, and we're very excited about that. People love auctions. We have two different auction sites. One is a live auction, and one is a eBay type of auction that we just built, that we just tested over the summer. So we're going to start to accumulate clients' diamonds and other diamonds that we need to put up on both sites, and we're going to start to be very, very active going into the new year on our auction sites for diamonds and coins and things like that. Also, instead of featuring one of our own diamonds each week, as we've done for the last 10 years, what we're going to start to do is feature Canadian diamonds that are in Canada that are owned by clients. Due to new laws in the United States and Canada, it's difficult with customs because the duties are so high and things like that. What we're going to attempt is each week we're going to feature, and this is going to start in the new year in January, because we want to do it correctly, but we are going to each week feature one of our clients' diamonds, not one of our own diamonds, but one of our clients' diamonds that's already up in Canada. This way, you can negotiate with the client. You can also avoid paying duties from the United States to Canada, which can be substantial along with insurance and shipping costs. So we're going to do this to help some clients because we have some clients that need to sell diamonds. Each week, we are going to feature one of our clients' diamonds that is already in Canada, so we can avoid all the issues of dealing with Canadian customs and U.S. customs and things like that. Then on top of that, if we make the sale, we're not going to take a penny of commission. All that money is going to go into the pockets of the buyer and seller. So all we're going to do at this point is going to facilitate and make available opportunities for our clients to sell and see how that goes. And then along with our auctions, which again are going to start in January substantially, we believe we're going to do a great job for our clients selling their diamonds for them. And again, this is a service that we're going to provide that's going to help our clients sell their diamonds, and we're not going to take a commission on it. So I'm excited about that, Randy. I believe it'll work very, very well.
I think it will too. You've proven out the theory of the auction site. We've had some amazing auctions in the past. People can take a look at the auction site, hsfineauctions.com. And don't forget, there is an auction underway right now that you can take part in. It's an ongoing auction. Items are in, and then once they're bid over a period of time, they're out and new items are put in. So check it out, hsfineauctions.com. Sign in and start bidding immediately. 1-800-432-1022, 1-800-432-1022, or rarecoloreddiamonds.com to connect with Harold about investing in gold, silver, diamonds, what's happening in the financial markets, trying to make sense of it all, and where does Harold think Bitcoin is going to go? I'm sure he'll be happy to give you his opinion. Now, two things are coming up in the week ahead. Obviously, next Saturday is Remembrance Day in Canada. It's a holiday in the United States as well, and they honor their servicemen, as so they should. And keep that in mind, that coming up on Saturday, as we tape this show on Thursday, November the 9th at 8:31 a.m. Mountain Time, Remembrance Day, Saturday, and in the United States, they have their own memorial to the military. But next week, on the 14th and 15th, there are two very, very big auctions coming up, and it's getting to the point where the auctions that are held by Christie's and Sotheby's in November in Geneva, Switzerland, are just literally off the charts when it comes to the diamonds that they are offering. And this is two of the diamonds that are going to be offered next week. The storied yellow diamonds could sell for $14 million. Sotheby's will offer the Donnersmarck diamonds. And I mentioned on a past show, the provenance on these things is literally off the charts. We couldn't even, it would take us an hour to go through the whole story of the woman who owned them and the story behind the diamonds. Once owned by La Pavia, one of the most famous 19th century courtesans in Paris, it's going to be auctioned off. Pre-estimate of $9 million to $14 million. A pair of fancy intense yellow diamonds consists of cushion-shaped diamonds weighing 102.5 carats, 5.4 carats, and pear-shaped 82.47 carat diamond. The stones will be offered as a single lot at the sale taking place at the Mandarin Hotel November the 15th. Now, they are also going to be auctioning off, and this is Sotheby's again, a 37 carat pink diamond. and it is called the Raja Pink. Now, the estimate on it is going to be $20 to $30 million. That will also go under the hammer. And Harold, we have two big auctions coming up next week. I cannot wait to see what some of these diamonds go for, because we have Christie's and Sotheby's, and some of the investment pieces they have are literally off the charts.
You bet, Randy. I can't wait to see those also. Those are some amazing pieces coming up for sale. And again, at recent auctions, we tend to concentrate on the big diamonds, the famous diamonds, the ones that are going to sell for multi-million dollars. And it's so exciting to see what these are selling for. And it gives you a great indication as to how strong the alternative asset market is. And we believe that the riskier the paper markets get, the more and more investors will flock towards the hard asset market. So again, we're very, very excited about that. In the new year, we anticipate doing a phenomenal job on our auctions and bringing to you some of the most amazing pieces of auction at auction: diamonds, jewelry, coins, all those type of situations that we feel are all very strong investments in this type of investment arena that we're in at this particular time.
Now, the Fancy Color Research Foundation, they actually have a tracking mechanism and indices, and they put out a report for the third quarter of 2017, and pink and blue diamonds have once again done very, very well. But it's interesting to note that the FCRF Advisory Board Chairman Eden, and actually I believe his name is, Harold told me one time, Eden, I say Eden, but Eden Rachmanov, he said, as far as supply is concerned, 2017 and the year before were record low years for fancy blue colored diamonds for production from mines. The majority of blues that are coming into the market are pre-owned stones. Manufacturers have seen a significant drop in availability across all sizes and quantities, and consequently prices have continued to increase. Going forward, the market will have to adjust to a lower new normal supply for blue, fancy colors, and pinks in high saturated levels. And Harold, that's even something that's being put forward in the gold market, is that there's peak gold based on the diamond or the mines that are out there for gold and silver, and we're starting to see that with the diamond mines of the world as well when it comes to rare colored diamonds, naturally fancy colored diamonds, because they're obviously an offshoot of diamonds. And to get them, they're the rarest of the rare, and they're just not coming out in the quantities that they once were.
That's for sure, Randy. Again, especially the Argyle mine, which is, as we know, going to close within a couple years. But as far as blue diamonds go, very, very seldom does a blue diamond found. So the diamonds that are coming onto the market over the last few years have been in collections for a long, long time, have possibly been in families, for 30, 40, 50 years or longer. Obviously purchased for way less than what they're selling for at this particular time, which is why they're such strong investments. So the Cullinan mine in South Africa is a very famous mine that has produced some of the most amazing blue diamonds ever, the Cullinan blue for starters. And the fact is that very seldom will a blue diamond come out of the mines anymore because they are that rare. First of all, boron needs to seep into the ground in order for the diamond to turn blue. And it doesn't turn many of the diamonds blue. It could turn, one or two out of millions of them. So, again, it's just a very, very rare diamond, a very rare color. Blues are extremely rare and have done tremendously well investment-wise, probably better than any asset that we've ever seen. Now, pinks are about to do the same things, and I've been saying for the last few years that green diamonds, I believe, are the next blues. So I think that the diamond market is on fire. It's not for everybody because diamonds are expensive, especially vivid blue diamonds that sell for, sometimes 3, 4, 5 million a carat. That 10 years ago they were 200,000 a carat. But again, how many people can afford to lay out that type of money? If you look at other auction results, though, you're going to find that diamonds that sell in the 20 to 100,000 range do extremely well at auction. So again, we're very excited about our two auction businesses, and we intend in the new year in January to start off with some very substantial auctions that we're hoping that our clients are going to truly enjoy.
And we mentioned it in the past here in the last few weeks. It was Paul Newman's Rolex watch, a Daytona, that went for $17.8 million. There's another car auction that's coming up in New York City, and they're having a big car auction there in December. And on December the 6th, R.M. Sotheby's will offer Steve McQueen's Le Mans racing suit and helmet for $500,000. So you can see the collectible market is strong. The Astros' final out ball is a collector's bargain. They believe that it could quite easily sell for $250,000. And as we close out today's program, I thought it would be fun to have a little laugh here. The world's highest paid TV show host, who is the guy that earns the most money, or woman? Dr. Phil earned $79 million last year, and good old Dr. Phil, he definitely gets everyone on the straight and narrow after they've been on his show, but he also makes a lot of money, Harold, at $79 million.
And didn't he have, I don't watch those, but I found it amusing that he was having marital problems, and that's where he gives all of his advice. Wasn't he cheating or something like that? It's just crazy what's happening with television and the entertainment world right now. The amount of money that people are making is astronomical, but good for them. They figured out how to do it, and they're living the dream type of thing. So good for them.
Yes, and obviously, if they can just keep their predilections under control. It's sad to see what's happened here in the last little while with Kevin Spacey and others having their careers basically wiped out. They made a movie, Kevin Spacey did, and it was on J. Paul Getty, and they are actually going back and redoing that movie and cutting him out and adding in another actor. Wow. That's they're really trying to get rid of you when they do that. It's pretty amazing. Harold, any closing thoughts on today's program?
No, it's been a pleasure doing the show today again, Randy. The markets are volatile, but again, risky. So best advice I can give you at this particular point is with the Dow at 23,500. That's the last place that I would jump into right now. You're not missing anything. There's going to be a correction eventually. Sit back and wait for the markets to come to you. That's the best advice I can give. Don't search out the markets. Wait for the markets to come to you. You've got a much better opportunity of buying low and selling high than jumping into a market at this particular point.
I would really encourage you to get a look at that article Jeff Clark did. We have it in our free weekly newsletter, So You're a Bitcoin Millionaire. And he goes through, and there are charts in there that show you can have markets sky high, and they can pull back, as we know from 2000 and 2007. They can pull back 50, 60%, even 70%, and it can take 20, 30 years for those markets to come back. So that's something to keep in mind. Harold, this is podcast number 2, and thank you for your knowledge and another great show.
It's been my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. Take a look at his website, hsfineauctions.com. There's an auction underway right now. We encourage you to take part in that. And yes, that is it. Our second podcast under our belt, and it feels good. That's it. Another edition of the World Financial Report podcast with Harold Siegel and me, Randy Marshall. We will talk to you next week.